It's that time of year where everybody's talking about taxes, where you have to file it, when you have to file it by, and all the deadlines. But to be honest, all you really want to hear is how much money you're getting back from the government. To be honest, we already pay the government enough that we never want to pay them anymore. Now, would you believe me if I told you that here in Canada, many owner operators are losing out on about $5,000 and more of tax refund, and to our US friends it's even worse. They're looking at about 1 million people in the US that are losing out on all the refunds and all the tax filings that they could be saving, getting money back from the government. That in result is causing almost $3 trillion of refunds that they're not really getting in their pockets and is staying with the IRS. My name is Matthew Lopez and I'm here at M7, and today we're going to be talking about some of the things that you can do to be able to save a little bit more and get more back from the government. Now you might be asking yourself, Matthew, how is it possible that I'm losing out on about $5,000 of tax refund here in Canada and even more possibly back in the US? Now I'll tell you a few reasons that may be happening. I'm not saying your accountant is unaware of all these things or maybe is not really trying to help you out, but it really comes down to the first point of bookkeeping. Most of the time you might be going to your accountant only once a year, which is at the time that you really have to file it to the IRS or CRA. And that is not giving them all the information they need to help you as much as possible when it comes to tax refunds. Another point that you may have is they might have a lot of knowledge in accounting, which a lot of accountants do, as they go through a very detailed course to become where they are today. But a lot of them don't really specialize in the trucking industry, and that is where they fail to help a lot of owner operators to get those tax refunds that may not be very knowledgeable or known to a lot of accountants that really don't specialize in the industry. And the third thing that they might not be able to help you out with, which is what we're talking here today, is what here in Canada we call meals and lodging, and in the US you're looking at the per diem, which is just a Latin way of saying per day of your meals write-off. So let's get started. When it comes to our Canadian clients watching this video, a lot of times if you are an owner operator, often you're driving for quite long periods of time and you're looking to be away from home for a little bit over 24 hours. And in that case, what you are able or eligible to be able to write off is your meals on a daily basis. So as a Canadian and as an owner operator over 24 hours, over a day away from your house, you're able to claim about $23 per meal for the year of 2021. And that is essentially, if you're a full day away from home, that's 3 meals per day. So we'll be going over an example later in this video about one of our clients and his situation. But for your knowledge, for the year of 2021 and 2022, the government or the CRA have let us declare $69 per day away from home for your meals write-off. But that is not for every single year. So if you do go back from 2021, you're looking at a little bit less or a little bit more, which is something that we can help you here at M7 Taxes. Now to our US friends that are watching this video, that is a little bit different from you, as the IRS in 2021 shifted a little bit, as up to September 30th, you're able to write off $66 for your meals for every day that you're away from home. And after September 30th, so October 1st and onwards for the year of 2021, you're looking at $69 write-off per day that you're away from home for your meals. Now before we move on to how you are able to write off those meals as an owner operator when you're away from home for over a day, let me give you an example of one of our clients. We have somebody who is a driver working on their T4 and he's making at about $75,000 gross income for the year. Now before we even included anything about meals and lodging write-offs here in Canada, if you're in the US you're looking at per diem, he was looking at only about $77 returned from the government for his tax refunds. Now that's not really much money for somebody who worked for a full year. So then we went into looking how much he can get back from the government when we declared those meals that he worked. throughout the year. So at our client specifically here in 2021, he worked at about 45 weeks away from home. And those 45 weeks is 100% in the US. He did about 5 days, full days away from home, which if you are able to declare 3 meals per day, you're looking at about 15 meals per week. So if we multiply that by the 45 weeks that he worked away from home, he was looking at about 675 meals in the entire year that he's able to write off in his taxes. Now, like I mentioned before, you're looking at about 23 bucks per meal write-off here in Canada for the year 2021. So with that calculation in mind, he has about $15,525 of meals that he's able to write off on his taxes. Now, we have to keep in mind that this price here is in USD because he did 100% USD trips. And as you know, the IRS declared that in 2021, obviously after September 30th, you're looking at about $69 write-off per day, which is pretty much the same as Canada. So looking at that, our client specifically, had about $15,525 is how much it is in the US. In order for us to gross that up to the exchange rate declared by CRA, which is about 1.25, and after all of our calculations, we were able to get our client about $4,780 in a tax refund, which if you remember to the beginning of this example, he was only looking at about $77 back from the government. And that's really how he was able to write off all of his meals here in Canada under the meals and lodging refund. And it's a lot of things that people miss that could potentially be $5,000 extra in your pockets. Now you might be wondering, how do I get that benefit for myself? And that's pretty simple from either the US side or the Canada side. But when you're looking at Canada, some of the things that you have to make sure is that you do have all your logbooks downloaded. Recently we've moved on to electronic logbooks, and if you are in the old school way of still having the paper logbooks, you do have to keep a copy of it, whether digital or in paper, for the entire year, because if the CRA do audit your tax return and wants to know how you are writing off all of these meals, which is quite a bit of money leaving their pockets, they do need that logbook in hand. And if you are one of our clients here at M7, you are able to quarterly send that electronic logbook over to us. As if you're working as an owner operator, you most likely provided your logbook on a quarterly basis, and your company actually deletes it afterwards from their system. So it's very important for you to save a copy or send it to somebody that is trusted like yourself, so that when it comes to the year end, we're able to help you with as much as possible with the tax refunds. Now, a lot of people might say, well, now I can just throw out all of my meal receipts that I eat throughout the whole year. And that's really not the case. What we suggest here at M7 is that once you are one of our clients, we do have a system in place where you're able to snap a picture of all your receipts, which at the end of the year gives us the power to help you out to get as much tax refund as possible. So if going based on your logbooks and writing off based on the meals and lodging may not be the best route, and let's say you did spend a little bit extra using your receipts throughout the year, then it's better for us to do your taxes based on the receipts of the meals you purchased throughout the year of 2021. Now, to our US friends, you're looking at the per diem. As I briefly mentioned before, you do have to be away from your home for 24 hours, and something that changed for the year of 2021 is that up to September 30th, you're only able to write off $66 per day that you're away from home. And beyond there, from October 1st to the end of 2021, you're looking at $69. Now you might think to yourself, it might be quite hard to know how many days I'm away from home, being able to track the partial days and the full days. So here at M7, we did create this book here, which is your per diem tracker. What this allows you to do is in every month, you do have your calendar completed here, and you're able to put an X to the date if you did, say, a full day away from home. And you can just put a line through it if you only did a partial day. So what does a partial day and a full day mean, as I've been saying quite often? So a partial day, as declared by the IRS, is that if you do leave your house on that first day, and technically you didn't stay 24 hours away from your house, that is going to be a partial day. And any day onwards that you are 24 hours away from home, that is when you are able to declare a full day for your meals. One final important note to our US friends watching this video is that if you are looking to write off your meals as a driver there in the USA, is that you do have to be under the 1099 to be able to get the per diem write-off on your taxes. It doesn't apply to anybody that is working under the W-2. Now here at M7, we really believe that really to make a profit, it's not really about how much you make in the year, but it's how much you're able to save and write off at the end of the year to be able to get that extra income, that extra cash flow in your business or in your pockets to be able to take on the year ahead. So if you did like this video or you want any more tips going forward or anything that really interests you regarding taxes, bookkeeping, relating to the trucking industry, drop a comment below, like this video, follow our channel, and really click the bell so that you can see when we post a new video, which is coming out every week. Thank you so much for watching, guys. Until next time.